Good morning to everyone. We're live. Thank you very much for joining us today on Behind the Markets. It is Finance Tuesday, where we get back into the data, the numbers, the digging. We do have this week, it is MPR. It should be, yes. We are awaiting the interest rate decision from our central bank. Following what we got from our bond auction, I'll be taking you through that tomorrow, along with some early results that we've picked up from there is a monetary policy meeting that has been announced, obviously, yes, as for Wednesday. So we will be paying attention to what is happening on Wednesday. But firstly, I would like to say a wonderful morning to my wonderful and lovely co-host Stephanie. How are you doing today?
Morning, Munyumba. I'm fine. How are you?
I'm fine, thanks, and welcome to everybody who has joined us today on social media, Facebook, on Twitter, whichever place you are joining us from today. Thank you for joining us. We know you could have been anywhere in the morning, but you chose to be with us. And now let us get down to the morning run up in terms of it. This is the 22nd of August. Yes, people, the year is flying, Stephanie. The year is flying. We're in that period where everybody's getting a bit itchy about their New Year's resolutions. How we're going to hit some of them. At least half of them have probably dropped. But it is actually one of the days when we cover them. Actually, Stephanie, just even as a side note, do you know what the three biggest categories of New Year's resolutions are? Give it a guess.
No.
Give it a guess. Give it a clean guess. What do you think are the categories for the three biggest categories for New Year's resolutions?
Mm. Ha. Okay, let's see. Um, Time, money,
Mhm.
and okay, for me it's time and money. Time
Well,
and money. Enjoyment, maybe for me.
yeah, it's true. It's true. Those are things that people do say. So, number one category for New Year's resolution is fitness. People are looking to be more fit, work out more, and eat better. Next one is money, looking to either get out of debt,
Exactly.
save, and all sorts. And the next one is relationships, trying to see if they can take better care of the people they know, reconnecting with old friends, trying to get that. And one other one they throw in is a bit more self-care, but the most common New Year's resolutions that are often thrown out there. In fact, here they are, in fact, in better order by Statista in terms of global. They've actually said that it is eat healthier, get more exercise, and save more money. Those are the top three: eat healthier, get more exercise, and save more money. Those are the most common things that people look. And I wonder, Stephanie, how many of us have eaten healthier this year, have exercised, and have saved more money?
The question is, when last did you drink milk, Munyumba?
I don't drink milk, people. I don't drink milk. I'm not a milk person. But I do. I have started to eat healthy. Right. So let's get into today's run up where we are looking at Finance Tuesday. Let's get into the market roundup. Now, touching on market roundup, we have seen that the Kwacha closed yesterday at 19.5127. Last week, we did see the Kwacha get a little bit stronger just before the bond auction, but we did see that has erased as well. Until we finish these debt negotiations, we're not going to see a strong Kwacha. These private credit to debt negotiations. Now, we did see Zambia did get a higher credit rating. Just remember that we did announce that was for our sovereign bond. So that's why you're seeing the 10-year bond performing very strong in this period, because obviously there was an improved rating by Moody's, but obviously S&P and Fitch are waiting for the private creditor renegotiations to see if Zambia can get an even higher ratings. But basically moving us from CA to CA3, where we are now looking at a much better risk rating. Now, in terms of that, our credit, what we call our credit default or our country default risk premium was currently sitting at about 18.21%. That was our country risk premium. It's about 18.21%. That's where we are sitting at this point. But by moving to a CA3 rating, we should actually start seeing our country default spread, our country risk premium actually start to come down to about 13%. In fact, about 15%, let me rather say, not 13%, but somewhere around 15%. So that should shave down about 3 percentage points of what an investor is looking for. Now, remember what a country default premium actually means is that is what is slapped on top of the risk of your nation. Of what people get in their corporate bond markets or their bond markets locally. So in America, it gets about 5%. Then they're looking for an extra about 15% versus Zambia, meaning that when they're coming to Zambia, they're no longer looking for about 27% return on investment. Now they're looking for about 20.1 return on investment, and that makes things like 10-year bonds, whether it's 8-year bonds, 7-year bonds, 10-year bonds, even 15-year bonds, look a little bit more attractive to them as investors. So that's one thing you have to bear in mind. They're getting good yields in their market, but for now they're actually quite attracted to them. So this should be reflecting in our in our FX market, but unfortunately we have got a backlog of how much demand there is for dollars in Zambia. So we still have a dollar that is up 7.82% on the year, 0.45% on the last month, and 0.37% over the last 7 days. Now, the stock market yesterday closed a little bit lower, 0.08% lower, as Zanaco shares were kind of selling off. We have mid-year results coming in from Airtel and Zambia Breweries, which we'll be going through tomorrow in depth, but we are seeing very positive results. Earnings season has started in terms of the reports, and we're seeing very strong results coming in from both Airtel and Zambia Breweries, which is showing one of the reasons why there is a transition slowly happening, and stock market companies are performing very well. But we do see the stock market is up 1.64% on the week, up 5.62% in the last 30 days, and up 18.46% year to date. Bond market is up 0.16% as of yesterday, and 0.23% in dollars and index. And in terms of interest rates, they came down by about 0.01%. Now, we did see that the rand also is still oscillating around that 1.03 number, 1.0280. Up 0.94% as of yesterday, up 1.11% on the week, down 5.02% on the month. There's a lot of volatility that we're seeing in terms of the rand itself. So that's kind of weak, but the rand is down 3.75% year to date. Now, this actually shows that we should have a bit less of that imported inflation pressure, especially with the South African inflation rate starting to cool off at the moment. Now, in terms of the GRZ bond index, we are seeing that it's up 17.22% year to date, while in terms of in dollars, it's up 9.07%. So this is news for the Zambians living abroad. And finally, we have seen that interest rates up 0.85% year to date. Now, as of yesterday, we did see that interest rates dropped by about 0.008%, dropping to 24.49. But remember, we're still dealing with that huge spike that happened at the beginning of the month. So at the beginning of the month. Copper yesterday drove back up a little bit at 0.68%, though we're still seeing some horrible performance. Companies like BHP, which we'll be going through tomorrow, have actually thrown out their earnings results, and they've seen that demand from China in terms of copper is down by 37%. That affects, remember, China is the number one importer of copper. A large amount of Zambia's copper ends up in China. So as a result, if we're losing that much, if China is seeing that much of a decline in demand, then you're seeing that much of a decline also in exports for Zambia in terms of our copper going out to China. Oil yesterday did drip down a little bit by 0.32%. Obviously, there is a little bit pushing oil prices up a little bit, but there is some pressure coming down from weak Chinese data. And we also did see gold up by 0.26%. Now, in terms of our expected pump price, we're still seeing about 27.41. This is around the time when we do expect ERB is doing the calculations. So remember, the pump price this month is 25.57. We're expecting pump prices to rise to 27.41, expecting a 7.2% increase in pump prices, which will reflect in all your transportation costs. So there will be transport inflation coming into this month. So this seems like an inflationary season. This is adding to the base case where I am saying that I'm expecting inflation to close the year somewhere between 11 and 13%, mainly because of transport prices and elevated food prices, which have stayed strong throughout the year. And remember, the final quarter is what we call the strong inflation hill, where we see inflation levels rise very fast, especially in December, when everyone is having party after party after party after party. and there's a wunga everywhere, that tends to actually drive the price of milli meal, tends to actually drive the price of imports up. And also there is a weakening of the currency because a lot of the manufacturers have to finish paying their bills to their South African suppliers around November, December. So you do see that weakening of the currency that will start to put a lot of pressure on prices in December. Remember, there's a lot of spending that also happens in December that drives a lot of economic activity. So you will see, if we're not seeing enough deflation, which we haven't seen in what we call the inflation valley, the inflation hill will pick up and it will be a much stronger inflationary cycle. So I'm expecting 11 to 13% inflation towards the end of the year. Wealth insurance assets, we have seen that Bitcoin has gone through a very strong turnaround. As you can see, Bitcoin has gone in the last 30 days from 580,000 kwacha for a Bitcoin to 508,000 kwacha, down 12.5% on the month, and its rally has dropped from about 90% year to date down to 69% year to date. This is what I've warned everyone with cryptocurrency. You keep it in moderation because too much of it, it's extremely volatile. Ethereum down from 36,000 to 32,000, also down 11.61% in the last month, but they both went up a little bit yesterday, 0.2%, 0.5%. And gold in kwacha is up 0.52%, as in dollars it rose, and also the dollar rose as well. So gold is up. Gold is down 1.85%, a bit less volatile than Bitcoin and Ethereum, and up 13.54% year to date. So you can see this is the stability. Now, if you look at the cross assets as of yesterday, bond market is up 17.2% year to date. Stock market's up 18.5% year to date. Dollars up 7.8% year to date, and gold is up 13.5%. Now, the red bar shows us what these all look like when adjusted for inflation. Bonds are up 8.77% above inflation. Stocks up 9.9% above inflation. US dollars are down 0.7% below inflation. Gold is up 4.9% above inflation. One of the reasons I've always kept telling people, one of the reasons dollars are not a great asset to save in is because dollars perform when there's massive inflation. And the problem is they never outpace the inflation. So the dollar always gets strong when inflation gets strong but gets eroded by inflation. But when inflation gets weak, the dollar stays flat. And these other assets tend to perform much stronger in cool inflation times, be it bonds, stocks, and the rest of the market. So that's kind of why I always say be careful about also excessively trying to keep too much of your portfolio in dollars, because dollars never outrun inflation. In fact, they're the worst performing asset against inflation. Bitcoin is up 69% year to date and up 60.5% against inflation. And Ethereum is up 49.6%, and up 40.41% above inflation. Now, if you look at the last quarter, now these two, the blue line is quarter to date. The kind of brownish green line is last quarter, which is quarter two of the year. We have seen that bonds up 3.4% in this quarter, stocks up 5.5% in this quarter. The US dollar is up 10.9% in this quarter because, as you've seen, inflation has been strong in this quarter. Gold is up 10.05% in this quarter, obviously because of the lifting of the gold price. But Bitcoin is down now 5.6%, even in kwacha during this quarter, and Ethereum is down 3.8% in this quarter. So you can see the crypto play, as I've said, highly volatile, so you keep it in moderation. So I'm going to keep telling people. That's why I call them wealth insurance assets. Finally, in terms of what we're looking at, in terms of the reads from yesterday, we did see that PPI data, in other words, producer price indices, prices coming out of factories in Germany dropped by 6%. Those are good inflation tailwinds, showing that the supply chains in Germany are getting very strong. German interest rates dropped from 3.75% to 3.61% for the 12-year bill. US 3-month and 6-month interest rates either dropped, but the 6-month one rose by 0.1%. And the PBOC, the Chinese People's Bank, the People's Bank of China, yesterday dropped its interest rate from 3.55% to 3.45% to stimulate a lot more lending into the economy. Canadian new price housing index showed that housing market is cooling off in Canada, and that weakness in the housing market in Canada and the weakness in the housing market in China and also in America It's going to start reflecting in lower demand for copper. Remember, copper is driven by housing production, infrastructure, and electric cars. Electric cars are the only things right now keeping copper up, and therefore Zambian income from copper imports, from copper exports, will be relatively difficult. Now, let's get into our daily deep dive before we get into our topic of discussion. Now, yesterday we did see that the Center for Trade Policy and Development has called on government to urgently actualize the sinking fund. Now, the sinking fund has been a mythical conversation that has been happening in this country since 2015 when we started borrowing out of control. They have pointed out there is a need for the government to focus on productive sectors such as mining, agriculture to boost economic growth. And these are two of the weakest sectors, by the way. Zambia is going to experience slow economic growth because of the mining and agriculture sector, along with electricity, which are all in recession right now. And therefore, they're dragging the economy down. Agriculture, we're expecting a boost in agricultural export, but for now, we're still seeing a battleground in trying to get our agricultural GDP up. Sinking fund account was created back in 2015 when we started borrowing as if we were at a dance disco party. But unfortunately, we're trying to save money to repay our debt. But unfortunately, the Minister of Finance did announce that as of October 2022, there's only $10 million in the sinking fund, which is insufficient to pay a country's debt, Stephanie, which owes $14 billion. You know, this was a sinking fund that was supposed to finance a lot of our debts, and it doesn't even have 1%, not even 1% of the money. So we really need to think about making sure that a lot of our mineral resource revenue starts to also go into that sinking fund. And what they need to start thinking about is also ring fencing that sinking fund. Okay, so that it's along with our debt repayment plans, we ring fence that sinking fund, hold it in either US securities or whatever it is, and so that to avoid also our government spending from it. Don't hold it in cash. Hold it in foreign market securities. So it should actually be managed like a sovereign fund. And then given to a certain fund management group so that at the time we need to pay off that debt, there's a set of assets that can be liquidated towards paying it. But if it sits in cash, we're going to start utilizing. I think that thing needs to be ring fenced and just kept outside. That sinking fund account has been unfortunate for us. Look at it now. As we're saying, it's only sitting at $10.3 million, yet it's been around since 2015, Stephanie. That's 8 years this thing has been around. And it's still, in fact, 7 years as up to that point. And yet we haven't even put in 1% of the money. And the money was due last year. So you can see where the problems are coming in terms of the money we had raised to actually make sure we paid off our debt. Other news that we saw in Africa, Malawi's inflation rate has jumped to 28%, largely due to increased food prices year on year. Headline inflation increased by 1.1% from 27.3% to 28.4% from the previous month. There was also a 2.1% increase in food inflation to 39.3%. So if you think we're suffering with 11% inflation, say hello to your neighbors who are now dealing with 40% food inflation, and they're dealing with serious spikes in Shima prices. If you think you are struggling, your friends next door are battling for their lives here when it comes to these things. And this is what I keep trying to tell people. But unfortunately, the statement, it's global, it's regional, this is happening. It's been abused before previously, and unfortunately, it has a bad taste in the people's mouths. But statistically, you need to understand that regionally in Africa, food prices are up, especially when you have droughts in countries like Kenya and East Africa in general. And then you've got DRC who are struggling with food prices. They are on the market hard looking for food prices around the market, and they are pushing prices up. So therefore, countries like Malawi, Zambia, we are struggling to keep even our local demand. And then you've got regional demand where there are issues as well. So even if we have a bumper harvest, remember the problem is that bumper harvest is being met by droughts. Now, I've always said this, Stephanie. If you want to alleviate my biggest concern when it comes to our people, and I'm just going into a drift of a discussion and I'll get your thoughts on it. My biggest concern with our people is I think we don't understand the cost of getting out of poverty. When American manufacturing plants first went to China, what they discovered was China was cheap at producing. And that was because China was majority poor. 98% of the population was in serious poverty. In fact, up to the year 2000, the average, that's at about 88%. There was more poverty in China than there was in Zambia. Okay, put that into your
Mm.
mind. There was more poverty in China than there was in Zambia at that time. Now, forwarding to today, what have we found? China has dropped its poverty levels before below 20%, while Zambia's poverty levels are still sitting somewhere above 88%. So, in fact, our poverty even rose during this last period. Unfortunately, that has not been great. So, here's the reality, by the way. As more Chinese have come out of poverty, their wage demands have risen. Because when people are not poor, Stephanie, they ask for higher salaries. That's how it works. So when people want to get people out of poverty, a nation has to stomach some inflation. You see, even anybody who does business with the Chinese will tell you that the days of things being dirt cheap in China are gone. They're not cheap anymore. Okay, think about even Chinese phones that we import here, those smartphones. They're not cheap anymore, people. They're full priced. Why? Because the labor costs have gone up. The average Chinese worker used to be paid $200 to $300 for a full year of work. Listen to me very carefully, Stephanie. A full year of work in the early 90s. Today, the average Chinese factory worker is now commanding almost $20,000 for a full year of work. What do you think that has done to the cost of products? So if you want, this is the problem I have with the Milli Meal conversation in Zambia. The majority of the country who are rural poor are the ones who are growing your maize, which is used in Milli Meal. So if you want to alleviate your poverty, Stephanie, I'm going to ask this question. Do you think Zambia can get the poor out of being poor without giving them higher prices for maize?
You might want to ask that again.
Do you think that we can pull our poor population out of poverty without higher maize prices?
Without Hermes prices. No.
You can't. Because you see, the problem is it's us who are the customers who are demanding it. And by the way, this affects me too, okay? But I'm being realistic to you. I'm being pragmatic to you. You can't say, oh, we want our poverty alleviated. We all stand there. No, we must combat poverty. We all pay lip service until we understand the cost of poverty is that all of us must stomach some inflation. All of us must stomach some reasonable level of inflation so that the farmers can get. So you have a conversation with somebody who is even growing maize. Okay, I was talking to somebody who was actually talking about it, saying he was asking somebody who grows maize and says, "You grow maize?" Like, yes, I do. So when you sold your maize to FRA, how much do you sell it for? 280. Okay, so how much do you expect a bag of Milli Meal to cost if you? And then he asked him the question: when you sold your Milli Meal last year, how much did you sell it for? Oh, I sold it for 130. How much was a bag of Milli Meal? About 100 and something. Okay, now how much is a bag? How much are you selling your maize for? 280. So how much do you expect a bag of Milli Meal to be now? You can't increase the price of maize without increasing the price of Milli Meal, because 49% of the price of maize, Stephanie, 49% of the price of Milli Meal, is the price of maize. Okay, so whatever the price is in terms of Milli Meal, 49% of it is coming from the maize price. So that already contributes directly. We're talking about just the maize price bought off the farmer. We're not even talking about transporting it into the milling plant. We're not even talking about processing it. We're not even talking about storing. We're talking about just the market price of maize constitutes 49% of the bag of Milli Meal already. So if the price of maize goes up, what do you think is going to happen to the price of Milli Meal? It goes up. Okay? And how do you pull the farmers out of poverty? By giving them a more profitable crop. So effectively, here's what the Zambian middle class are saying. We want you to fight poverty, but not at our expense. Okay? We're not going to sacrifice, because under no circumstances do I want my life to be inconvenienced. And people don't like the statement. I get it. I'm going to get a lot of the wokies who are going to start saying, yeah, 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 whatever. Unfortunately, that is reality. I'm giving you reality. Okay, so, and I've said this for a long time, we are going to have to learn as people to start developing ourselves personally to outpace inflation. And it's because this is a conversation we had last time, Stephanie, where I said it's easier to point at what somebody else should be doing. It's easier to have the inflation conversation than it is to have the skills conversation. What are you doing to improve your personal productivity and your value? What are you investing in? Are you investing in learning, or are you using the same bundles that you should be using to learn a new skill, become proficient at something? Are you utilizing those same bundles to nag? Okay, because there's plenty of free education out there, by the way. If you have bundles and you have a device, you have access to a lot of free education on there, which can improve your skills. You can learn how to make websites. You can learn how to do digital marketing. You can learn how to do so many skills out there. Okay, there are so many skills that you can learn out there just using YouTube, instead of being on that comment, start fighting about things, or start saying this, that, this, that. So the reality is, I'm going to say this to the Zambian people: no matter what anyone tells you, okay, for the next 10 years, the increase in economic activity will come with some level of inflation. The only thing you should be looking for is, can the inflation remain controllable? That's all you're looking for. You're not looking for the prices to stay the same, because farmers will reject that. How do you tell? And I'm going to play a video clip about inflation, actually, which is something that everyone likes to fight. This is from Milton Friedman, where he actually talks about why inflation is it's a tough conversation, but there's human nature involved in this. So this is Milton Friedman, the economist, actually talking about how people speak about inflation, but what they really mean. So listen to this, Stephanie.
Consumers who are spendthrift, they've always been. Inflation doesn't arise because you got consumers who are spendthrift. They've always been spendthrift. It doesn't arise because you've got businessmen who are greedy. They've always been greedy. Inflation arises because we as citizens have been asking you as politicians to perform an impossible task. We've been asking you to spend somebody else's money on us, but not to spend our money on anybody else. Everybody talks against inflation, but what he means is that he wants the prices of the things he sells to go up and the prices of the things he buys to go down. The real tax on the American people is not what you label taxes. It's total spending. If Congress spends $50 billion more than it takes in, if government spends $50 billion, who do you suppose pays that $50 billion?
Of course.
The Arab sheiks aren't paying it. Santa Claus isn't paying it. The Tooth Fairy isn't paying it. You and I, as taxpayers, are paying it indirectly through hidden taxation.
And what Milton Friedman means by hidden taxation is he means the increased cost of things. Okay, that's what he means. He says, when the government spends more than it makes in taxes, who do you think pays that cost? So what he's saying is that we all want the government. We all say, tax that person, tax that person. How many people say, I'll pay more taxes? No one. No one wants to pay more taxes, but we want the government to collect more tax. Where do you want them to collect it from? So I always ask people, where do you want the government to collect more taxes from if you don't want to pay more taxes? So you don't want to pay more taxes, but you want the government to pay more taxes. And so you want the government to collect more taxes. So you want the government to spend other people's money on you, but you don't want them to spend your money on someone else already. Two, you don't want the government, you want the price of the things you spend money on to go down, but you don't want the price of the things you make money off to go down. So here's a simple question, Stephanie. How many people would be willing to take a wage cut to improve the economy? How many people do you think would be willing to take a wage cut? How many people would say, in order to improve inflation, boss, how about you cut my salary by 10%? Because we need to bring inflation down. How many people do you see queuing up for that?
Out of 10, I think I must be seeing 3.
3. You think
2,
3 people? Yeah. You don't know this guy. 0.
2. They're always those that love charity.
No
Seriously,
one
but
will take a pay cut on purpose. No one will take a pay cut. How many people will say, boss, I asked you for an inflation-based wage hike last year. I told you, but prices of things have come down this month. You can cut my salary. How many people voluntarily, Stephanie, would cut their salary at work when they see the price of things going down? Okay, no one.
Yeah.
Okay,
No one.
exactly. So you don't want the price of the time you are selling to go down, but you want everyone else's economic value to go down. Inflation, the argument really, and this is what people don't like, it speaks to our greed. The truth is, we as people are self-interested and we are greedy, and we're demanding the government speak to our greed and self-interest. You may not like that, but you have to look in the mirror and start to answer that question. So yes, some of the people in this economy are going to demand some inflation because they also want to live nice lives. They also want to be able to afford electricity. They also want to send their kids to private school. They also would like to one day afford a car. Not just you, so you can be Uncle Ndarama at the next wedding or funeral. They would like to also elevate to becoming that position. And in order for them to do that, they need higher milli meal price. They need higher maize prices. They need higher vegetable prices. These are the realities that they're going to have to face. We are undercutting the poorest people in our country to keep our cushy lives the way they are. So all of us who are in the middle are going to have to invest heavily in our skills and capabilities to outpace the price hikes that the poor are going to be demanding for the products that they are selling to us. That is a reality that we're going to have to start doing. So really look inside yourself and start investing in your skills, because you are not what you're trying to do by having the battle of inflation. And then people will say, well, let's introduce subsidies so that we can both get it. So once again, you are asking the government to spend someone else's money, because that's going to have to come from somewhere. And if it doesn't come from somewhere, they're going to have to print that money to put it into the economy, which is then going to inflate the cost of everything. All right. You can't run away from inflation. You can't run away from it. It just finds a different avenue to manifest again. So this is something that I think our people have to really get into our minds. Let's get into the rest of the deep dive conversations today. I was trying to bring this up, especially when it comes to food prices. Yesterday, the PBOC did announce that it did cut its interest rates again for the second time from 3.55% to 3.4% in the country's post-COVID recovery, which has been weak, in an attempt to stimulate its housing sector and other economic sectors, especially its manufacturing sector. Oil prices have risen around the world slightly due to tightening from Saudi Arabia and Russia. This did offset the nags about negative growth. However, oil has had a negative streak. Both benchmark prices snapped a 7-week winning streak last week with a loss of about 2%, as you saw dollar strength and worsening Chinese economic data. Now, here's some of the numbers that we picked up from the global economy and some data coming around. $15.5 trillion, figure it out. So that is the 2033 projected global travel industry, which is set to account for 11.6% of the global economy by that year. Global travel is expected to keep growing and growing and growing, especially with post-COVID revenge travel. Charts of the day has shown that in terms of housing construction in America, 4-bedroom houses are actually starting to rise the most. They're actually seeing that now the stock of houses being built is no longer 2-bedroom or less in America. It's 4-bedroom houses. Ironically, this is ironic to me because family formation in America has actually shrunk. But one of the things you're also seeing is renting is high amongst the young people and not amongst, so therefore the people who are purchasing or building houses are mostly old people with families. So you're seeing that they're actually making up quite a large number of it. US, and also the other thing that you've also seen that's also rising, this is the rise of remote work. So look at how the pandemic is affecting the home construction industry in the USA, which is affecting even copper and stuff like that, just remember. But they're saying the rise of remote work and hybrid work in recent studies has shown and indicated that close to 30% of paid for workers has actually increased to people who work, of fully paid workers of work days in the US have been worked from home. This is up from around 5% in 2019. So in other words, only now almost 1 in every 3 work days is done from home, as opposed to only 1 in 20 back in 2019. That's a massive change. And what they found was 80% of builders in America are now saying that they have to build extra offices. Okay, 72% said that home offices are a likely feature in 2023 new homes with power granite countertops. So they're saying that now a home has to have an office now because 30% of work days are being performed from home. So you have to have your bedroom this side, you have to have your office this side. So every house has to give an extra room for an office. So see how the professional working from home also might slightly affect the housing market. And I think these are the future of things that we can start to look at for people who are building urban houses for professionals, not people who are building urban houses, the people who are building high density, low cost houses. The people who are building middle cost houses, especially for single professionals or even married professionals, you have to consider that there may be a space for an office. So this may be where you may see 3-bedroom houses come back into order. If somebody works from home, they may need one of the rooms to be an office, one room to be a bedroom, and then maybe one room is a room for a child or something. So you'll start to see demand for certain things rise. Other news that we saw yesterday, Stephanie, when we're looking at some of the conversations, is the BRICS conference is happening soon. And this is the number of countries that are interested in joining BRICS. 12 nations have actually cited their interest in joining BRICS, which is Brazil, Russia, India, China, and South Africa. Though it was originally meant to be BRIC, it is now BRICS. Though the original person doesn't like the fact that it should be BRICS because they said South Africa is a very, very dodgy entry. But you can see Nigeria wants to be part of it. You can also see the growth in countries like Ethiopia, Egypt, many other BRICS, many other nations from Asia, South America, or from the global south are flocking. Almost 24, those 12 nations in the global south have formally requested to join BRICS, and several others have expressed interest. The group hasn't taken in any new members since South Africa in 2010. It could generate it could generate over half of global GDP by 2040 if aspiring members such as Indonesia and South America join, according to Bloomberg estimates. And as you can see here, if you look by 2040, that's the blue line here, BRICS is expected to become close to about 50% of the world, but at least it's on track for 40% of the world's GDP. However, if you look at the G7 line, which is the black one, the Western world is shifting. So when we're looking at our trade policy as a country and even as a continent, we must be very careful about which side of this we're playing, because this is a huge shift in what we're expecting to see going forward. This is a big change. Okay, the fact that we've had the point of inflection around the pandemic, this is actually something interesting that happened. Around the pandemic was the time G7 and BRICS were the same size in terms of economic value. So going forward, take a look at what that means in terms of percentage of the world's GDP. BRICS is already bigger than the global seven, the global group of seven. So as we wind up, Stephanie, today, I'm going to throw out a question here for people to say. What drives the decision for you to buy something or to own something, Stephanie? Is it the cost of acquiring it or the cost of maintaining it? I'm going to throw that question at you as our final discussion point, Stephanie. What drives your decision to buy something, be it a house, be it a car, be it a phone, a laptop, anything? What drives your decision to buy something? Is it how much it costs to buy it itself, or how much will it cost me to maintain it going forward after I've bought it? What's your answer?
How much the cost of maintenance? For me, I think buying is not the problem. The problem is what to buy. But I'm talking about the cost of maintenance. Am I able to maintain that phone, the house that I buy? What about the car that I want? Will I be able to maintain it? Do I have the spare parts? Are the spare parts there in the country and stuff like that? So for me, it's not the cost. The cost is not the problem, but maintaining.
Okay, so I've put that in the comment section for anybody here who's interested in answering that question. Please give us the answer of what you think. What drives your
We do have
decision?
a call on the other side. Could we pick it up? Hello?
Hello, good morning. Am I through to the studio?
Yes, you're live on Money FM radio. Your name and where you calling us from?
This is Hams.
Yes, Hams.
Good morning, Munyumba.
Good morning, Hams.
Listening to your discourse on, how inflation manifests, and sometimes it starts feeling like one is chasing the wind. You're trying to balance the budget, but inflationary forces are pushing different, aspects of, the daily needs. And looking at food inflation, you find that the same way you pointed out, it's manifesting in mealie meal. If it's not manifesting in mealie meal, it's manifesting in another aspect of life. We've seen over the years, electricity, water bills have gone up. So maybe the question is, what is how does one navigate this? You have said, get skills, but here's somebody who's just say, he's just a clerk, say in a government department. He just has a regular day job, or anyone who has a regular day job. You're working 6 to 6. You're already, your time is already committed. How do you make more money? I know it's the proverbial side hustle, but really, I've seen, depending on people's circumstances, it can be a tough one. So how do what's the message for one in such a situation? Thank you.
Thank you very much, Mr. Hams. Of course, to be part of discussion, continue to call the number 077-1616-290. We do have a text message, and let me get to read out this one as you. Okay, this one says, good morning, Money FM and listeners. Edward Cabanane. Good morning. This one is actually from Cheston. Good morning.
Okay, so good morning to you, Edward. Let's answer that question as I'll wind up, and I'll also just give my answer to the final thing. Stephanie, the reality is people must accept inflation. For a nation that's trying to come out of poverty, you must accept its existence. Okay? I think the biggest problem is everyone is trying to wish and hope inflation away, and then it ends up coming, and then they get frustrated. So build inflation into your expectations of life. I think what we should be asking for is tolerable inflation. Okay? That it shouldn't be on the run, that we shouldn't be dealing with double digits or 20%. That's not what we should be dealing with. Can we get our inflation to a tolerable level? That's what we're looking for. However, Stephanie, if you can see the gauge of how inflation is, it's somewhere around the 10 to 11. In fact, if I say to you that it's around 10 to 11%, then the reality is, one, you're going to have to become more aggressive with your budgeting. That's one thing. You're going to have to become more aggressive with your budgeting. And I'm sure everybody has this run the scenario down to the bottom and constantly tell me, but what about this person? There's always a person who's going to struggle in this situation.
Are we good?
I'm not sure if you can hear me now.
Yeah, we can.
Okay, so there's always a person who's going to struggle in this situation. But the reality, Stephanie, going forward, sorry, I think we've lost the microphone. But the reality in this is that everybody has to start looking at how to improve the value of their working hours. I'm not just talking about side hustles. I'm talking about your working hours. So you are going to have to tolerate some pain while you are studying to improve. If you're a clerk at a government job, are you going to be that clerk forever? What are you looking at in terms of the skills sector of the economy? What is there, okay, to teach you so that you can upgrade your value to your employer and so that you can actually go for some of these positions? The problem, Stephanie, is a lot of people want to keep the exact same qualifications that they've had for the last decade and then pray that they're going to get more money. A lot of them don't want to improve their sales skills. They don't want to improve their customer service skills. They don't want to improve their problem-solving skills. They don't want to upgrade their certificates. Nobody wants to push the envelope on the things that they know. They don't want to put their hand up for new projects, but they say, no, but inflation is eating us alive. You are standing still. So I will tell you this, if you stand still in a moving environment, you're going to get wiped out. So one, budget aggressively, because you're going to have to make sure that you're using every coin properly. And two, make sure that you are now investing time, not just time, in improving the value to your current employer, or at least the market value of those 8 hours you are already working. Not the extra hours you're side hustling. I even say use those extra hours to invest in improving the 8 hours you already have. because everybody knows that the moment you improve your qualifications and capabilities, you will improve your marketability in terms of your time, in terms of the value of your time. So you've got to start working that level of diligently. But I can guarantee you, Stephanie, the conversation will always be around that. I have seen people there are people who have gone from office orderlies who have just taken night school, and they have studied, and then they've gone from an office orderly to an officer to all sorts of things where they've risen in the same institution and improved their lives. So the question is, how much are you willing to actually work on yourself to constantly improve the value of the 8 hours that you are giving at work? If the answer is 0, then you are going to be a victim of inflation. And then 2, the other thing, Stephanie, is you've also got to start building up the assets that can become inflation agile in your investment strategy so that you can one day exit out of this. But the first investment you have to make is in yourself. If you are unwilling to invest in yourself, then inflation will always be a conversation. That's why I said it's easier to talk about inflation than it is to address yourself. I don't care what level you are, you can invest in yourself. That's a reality.
Definitely. And on that note, Munyumba, we should be getting to wrap up. Don't know what's happening to my camera. It sort of can't go on, but of course, this is where we get to wrap up on that note.
All right. Have a nice day. See you tomorrow.
So yeah.